Welcome to the Be Smart podcast, how not to be an idiot with your money. Jared, it is book week for you. Excited?
Actually, it's book day. I mean, this is getting released on Tuesday, right?
By the time this is out, the book will be out.
This is out. Rule 62 is out. You must buy the book. Awesome book. A lot of work went into this. I mean, this is like 2.5 years of writing. I wrote, maybe close to 200,000 words. We cut it back to about 115,000. So this is the finished product, and you're going to love it.
We're going to drop a link in the description just to make it easy. So go out there and buy that. What's going on with you? Anything new?
Not a lot. I'm going to New York next week. I get a short trip to New York, and then we got a couple more weeks, and then we got the party in Nashville. So, which, by the way, sold out as of today. It's sold out.
Very cool. You want to go right into market headlines?
Oh, there's a lot. There's a lot to talk about.
We'll start with this U.S.-Iran stuff. So the Strait of Hormuz saber rattling ramps up following U.S. attack. Whether the key waterway will close is less clear. Oil futures slid on Monday morning as investor concerns over the threat of supply disruptions stemming from U.S. strikes against Iran's nuclear facilities faded. As for the Strait of Hormuz, Iran's parliament has pushed the nation to close it according to state media, but left the final decision to choke off the key waterway to Iran's Supreme National Security Council. Vice President J.D. Vance shot back Sunday, saying that such an action would be suicidal for Iran as their entire economy runs through the Strait of Hormuz. Let's start with this specter of a spike in energy prices, although worries do seem to be fading a little here. I see that oil is selling off pretty hard today. Then we can get into stocks, bonds, gold, etc. Let's save the dollar for our next headline, though.
When I walked in here, oil was down about $4.50, down about 6%. So one thing that you didn't mention is that literally like an hour ago, Iran sent a bunch of missiles over to Qatar, aimed at a U.S. base, and it was intercepted by Qatar's defense systems. Apparently, all the Gulf nations are upset about this, that Iran would attack another Gulf state. But when that happened, when it was first announced that the missiles were launched, stocks sold off pretty hard. And then when it was announced that they were intercepted, they rallied back and then some. And that's when oil sold off. So one of the things I've been talking about on Twitter a little bit, and also in my newsletter, is people love to fade geopolitical risk, right? Like anytime there's an attack or some flare up somewhere, people sell oil, they buy stocks, they sell bonds. Like if you remember when Trump was president the first time around in like 2019, when he killed that Iranian general Soleimani, right? You remember that?
Yeah.
Like basically blew up his car with a drone. Oil spiked like $5 on that. Everybody sold it, and that was the high for like months to come. So people have just been trained that geopolitical risk should always be faded. And I don't think that's necessarily the case. Like, so you mentioned Iranian's parliament closing down the Strait of Hormuz. It would be, J.D. Vance is right, it would be suicidal for their economy. I don't put it past them. I'm not saying it's going to happen. It's probably not going to happen, actually. But if it does, then like great, you made $4 selling oil at 75, but then it goes to 120 because that's where it's going to go if they close the Strait of Hormuz. It's going triple digits. So I don't like to play around with these sorts of trades. I just like to trade the charts and keep my nose out of trouble. Basically,
I take it that your outlook hasn't changed too much with all the stuff going on.
Well, actually, the one thing that has changed my macro outlook a little bit is what you're going to talk about next.
Yes, and we'll get right into that. The dollar falls on dovish Fed comments. The yen also dips after Iran bombings. This comes after Federal Reserve Vice Chair for Supervision, Michelle Bowman, said that the U.S. Central Bank should consider rate cuts soon, reversing the dollar's earlier rally. Bowman said the time to cut interest rates may be fast approaching. You want to start with the dollar? What's your near and longer term outlook, and how much do you see this conflict in the Middle East impacting the dollar's safe haven appeal?
I mean, the dollar is so technically oversold. It's ridiculously oversold. I am long. I am still long. So the dollar was actually up about 2/3% when I walked in this morning. Now it's down a little bit. Um, so Mickey Bowman is now talking about cutting interest rates. Some people are very cynically saying she is also running for Fed chair. I don't think that's true. Um, I think we do need to cut interest rates. And, as you know, like most currency moves are based on interest rate differentials. So if one country is cutting interest rates, the other one is raising them, then the one that's raising them usually has a stronger currency, right? So basically the dollar is weaker today because of this talk about cutting interest rates. Fed funds futures out in January were up like 8.5, 9 basis points. Um, I tend to think unless something unless there's new information between now and the next meeting, the July meeting, I still don't think we're going to cut rates, and I think Powell really doesn't want to. But the one thing I've learned from years of trading short-term rates is that when they start to move, you usually don't want to get in the way, you know. Um, so what'll be interesting to see is if other Fed speakers start echoing the same sentiment, and really provide confirmation. So I'm sort of look like like I said, from a technical standpoint, I'm still long the dollar. I'm still bullish on the dollar, but and it's also not to say that um, the dollar can't rally when the Fed is cutting interest rates, because that's also possible.
So no rate cuts in July in your estimation. When do you think
I
we'll
don't
we'll get
I don't
one?
think so. I don't think so. But I mean, basically, if you look out the interest rate curve, like the whole curve moves, right? So like when I'm looking at rates out in like 2026, 2027, and it's all moved about 10 basis points today. So I don't think we're going to get a rate cut in July, but out the curve, sure, I think we're going to get some.
Next up is the Mag 7. Ordinary investors are souring on big tech. Individual investors have cut back on purchases of the Magnificent Seven and other tech giants in recent weeks. Retail buying has fallen as a percentage of total inflows to about 23% in mid June from about 41% at the start of April's market turmoil. Some investors are shifting toward international stocks, smaller companies, utilities, and consumer staples. What do you make of this? Do you agree with some of the concerns that Mag 7 valuations are overstretched?
It's funny you just gave those statistics, and I hadn't heard that before, but that's super interesting. I might want to borrow that for a newsletter. Yeah, I think Google is down 7% today. Yeah, the Mag 7 has been acting like crap. Yeah, I mean, this is look like we have a surprise in the works for our listeners and our readers, a new product that is really based on this thesis that people are going to be moving out of large cap growth and into small cap. So I think, we've been I've been seeing this sort of in dribs and drabs over the last 1 or 2 months, and it's starting to pick up speed. So yeah, the place to be is not large cap growth at this point in time, for sure.
For our main topic, Jared, we've got a new internet catchphrase. You remember the quiet quitting stuff, all that.
Yeah.
Remember? We've got revenge saving now. So the post pandemic era of revenge spending is over. Now Americans seem to be channeling that same intensity into bulking up their savings in a period of economic uncertainty with no buy challenges trending and savings rates spiking. The personal savings rate jumped from 4.1% to 4.9% between January and April, with emergency savings being the most popular goal. I mean, from a personal finance point of view, this seems like a positive, especially for younger generations. Have any of your students shifted toward this savings mentality?
I haven't heard anything about it. I mean, I haven't, I'm off for the summer, so I'm not teaching right now, but um like this is all a really good thing. This is a really good thing. There's going to be some people like I would guess that any number of ding dongs listening to this podcast are going to be like, oh, it's bad for the economy. People aren't spending, whatever. Like, the best way to think about the best way to think about this, if you look at the equation for GDP, so GDP equals C plus I plus G plus NX, right? So C is consumption, I is investment, G is government spending, and NX is net exports, right? So what you're seeing is consumption going down, but you're going to see you're going to see investing going up, right? Savings and investment. And a drop in consumption is bad for the economy in the short term, but it's very good for the economy in the long term. So it's like short term pain, long term gain. And I like, there's so many like journalists and economists and stuff like that, like their whole world revolves around consumption, and they think that if there's a drop in consumption it's like terrible for the economy. It really isn't. It's really just postponed consumption, you know. So I haven't heard of this revenge saving. I mean, if it's I think most fads are dumb, but I think as far as fads go, like this is pretty good. So
I mean, you wrote about it in No Worries, the importance of an emergency fund. Do you think people could maybe get too carried away with it though and start depriving themselves of simple pleasures?
I mean, for sure, like, I talk about that in No Worries, but like I would rather somebody have a $50,000 emergency fund than no emergency fund. You know what I mean?
Yeah, definitely.
I would rather, if you're given a choice between the two extremes, I would rather have the extreme savings than the extreme spending.
Yeah, I saw this as a positive for sure. Looking at the week ahead, honestly, geopolitics are probably going to overshadow economics this week, but we have a reading of the Fed's preferred inflation gauge, PCE, updates on activity in the manufacturing and services sectors, consumer confidence, and the final reading of first quarter economic growth. Also on deck, a 2-day semi-annual monetary policy testimony from Fed Chair Jerome Powell, which starts on Tuesday. What are you looking at here?
Tuesday of this week or next week?
I think it's this week.
This week? Okay. I think that's the most important data point is what Jay Powell has to say. GDP could move the needle a little bit. I don't really have an opinion on words. I never have an opinion on economic data, but yeah, I think people are expecting growth to come in slower. I think people are probably expecting, I don't know what the expected number is, but I would guess the whisper number on that is like 1.5% to 2%. I think it's possible that it could surprise to the upside.
That's all I got for you today. But everyone, Rule 62 is out. Smash the buy button. And Jared, I'll talk to you here soon. Everyone, please like and subscribe. We'll be back next week.
All right. See ya.
Later.